morning. Okay.
Yeah. So what's been happening in the DeFi world?
Well, it's actually not a DeFi issue, but there was a
Oh,
significant happening with one of the centralized exchanges, FTX. I don't know if you've heard anything about it.
well, I heard about the downfall of this billionaire kid, and they're all in this mansion, all screwing each other, and he lost a whole bunch of money, and then there's like 100 or 200 million somewhere hidden. I don't know. Is that related or?
Yeah, well, I mean that's kind of the high level kind of happenings, I suppose. But there was a significant what really surprising is that there was a lot of big players that got caught up in this whole
Oh yeah,
debacle.
Kevin O'Leary, right?
Well, Kevin O'Leary is one. The Ontario Teachers Pension Plan is another. They lost $90 million, if you can
Oh
believe that.
God.
Yeah, it's maybe small change to them, but that's a fair chunk of money if you ask me.
Yeah, yeah, it is. Yeah, which maybe didn't have to be lost. I don't know.
Well, it definitely comes down to due diligence. I mean, after the fact, I guess you can kind of point towards that and say, well, hey, why wasn't anyone paying attention to this or that? Like it just seemed that there was some glaring issues that even guys like Kevin O'Leary, who claimed to be, the investment guru, and that they had more winners and they've had losers, and but to have missed some of these, like for example, one of the companies involved is a company called Almeida, and it's a subsidiary of FTX. And anyways, the CEO of Almeida was a 26-year-old female who just graduated from university, and just it just didn't seem that there was the proper professional people in place that you would have thought that the Ontario Teachers Pension Plan would have demanded to have competent, capable, proven managers, if you will, but that
Mhm.
seems to have slipped through the cracks. So,
So how does that happen? That's the thing that, like, I look at all these things. Like you had, what's her name there, Holmes, that did the blood startup in Silicon Valley. Did you ever hear about that one?
just vaguely, I don't.
But yeah, the
Yeah, I mean,
Theranos. That's it.
yeah, yeah. I'm vaguely familiar with it. Yeah.
We have these. It's always these young visionaries, or well, visionaries. And I don't think the Theranos situation was necessarily like at the beginning. It wasn't meant to rip people off. It was just they just got under the pressure of the game, right? And they couldn't deliver on what the vision was. I don't know if that's the same with these people. But it's just funny how people get duped. And I don't even know if that's what happens though. I don't think people go into it thinking I'm going to dupe a bunch of people. I think they believe what they're doing. That's what I like to think.
Yeah, I think what's the issue is that maybe initially they don't think that, but then the money starts rolling in and they start getting, I don't know, like maybe cocky. They start getting invincible. Like like there's like this Sam Bankman-Fried, who's the guy that was the running FTX. Basically, I mean, he came from a well-rounded background. His parents are professors at Harvard or MIT or one of those prestigious universities, and
Mhm.
so he kind of had a silver spoon in his mouth. Maybe that's kind of the problem, is that the expectation on his part was, oh, I can't do any wrong, and it really, at the end of the day, it was a lack of oversight on his part. If in fact this isn't a malicious or if it's not an intentional defrauding of money from people,
Yeah.
which again, I agree with you. It may not have started out that way, but it certainly looks like it's ending that way. And
Yeah.
like I said, it's probably a combination of factors.
Yeah. Yeah, it's one of those things. It's a relative thing. Once you have made that money, it's like, I can't imagine not having it. So let's figure out a way to hide it or stuff it under the mattress or the crawl space. I mean, obviously that's not what they're doing, but they're putting it somewhere so that, they can get at it at some point. So they're not starving to death, at least what they think is starving.
He claims to have less than $100,000 left. So I don't know. I mean, it's interesting though, because the mainstream media have painted this guy as the world's savior, and that he was going to change the world with all his riches, and he was altruistic in that regard. And he just happened to be a huge Democratic donor, though. I mean, so, I don't know. I don't like talking about politics, but it's certainly, I mean, it's interesting to see where his money was going, right? And, there was just a midterm election down in the United States, and a significant amount of resources were expended to, get certain people elected and whatnot. So anyway, it's interesting because now and then you get the mainstream media, like the New York Times, for example, just did a symposium of different people speaking. And even after this debacle, they still invited Sam, and they praised what he had done. And, and he did the me culpa thing. Like, I didn't, it wasn't me. I should have paid more attention, but I wasn't paying attention. And, that's on me. But at the end of the day, it sounds like more of an escape than an excuse, right? So anyway, the good thing about this, though, it's not a failure of blockchain.
Mm-hmm.
It's a failure of centralized finance. And so, I mean, we'll get into, I guess, analysis on centralized and decentralized. And there's a new term that's come out now. It's called TradFi, which is traditional finance. So you got you got CFI, and you got DeFi. I mean, leave it to crypto to come up with all these apps and whatnot. But anyways, it's I just came across the TradFi acronym within the last couple of weeks. There, it's been kind of front and center when talking about the failure of FTX, right? So,
yeah. So what led to the failure of FTX? Was it? Yeah.
Yeah, the failure was basically leverage, right? Like, that's failure pretty much 100% of the time. Anytime you look at something failing, it's because you're leveraged, right? So what FTX was doing, and they had, like I said, FTX is the parent company, and they had another company called Alameda, which was kind of the investment arm, if you will. And so FTX was taking, and FTX had a token, a cryptocurrency token called FTT, which is what, the Kevin O'Leary's and the Ontario Teachers Pension Plan, that's what they invested in, was the FTX token, the FTT token. And the value that was placed on the market cap, I guess, on the last round of financing, placed the market cap at $32 billion for FTX, when, I don't know, it's hard to say how that valuation was arrived at, but that was what they were raising money at, a $32 billion valuation. So what FTX was doing was they were taking these FTT tokens, which were worth, I mean, at one point, I think they were worth close to $50 a token. And so they were lending those tokens to Alameda, and Alameda was then taking those tokens and securitizing those tokens against loans for some stable coins, and then taking, the money that they raised from the stable coins and then going out and putting, making, risky bets on different cryptocurrencies. There was a situation just prior to FTX called the Luna. I don't know if you're familiar with Luna. It was a stable coin that imploded, and a lot of the Quebec teachers pension plan lost like $100 million in that deal. But anyways, this Alameda took these FTT tokens and used them as leverage to get loans. And then the other thing that was happening, and the Bankman-Fried claims he didn't know what was happening, was that when people would open an account with FTX and deposit their Bitcoin, let's say, into the FTX account, FTX was taking that Bitcoin and sending it over to Alameda to leverage against, some risky cryptocurrency bets. So you kind of had a double leverage thing happening, one with their own token, the FTT token, and then with customer deposits, right? They were taking customer deposits and moving those coins or those tokens or, those deposits over to Alameda so that they could then leverage those tokens and make even more risky bets. So it was kind of a complicated web, and certainly all of the facts aren't out there yet. I mean, those are just kind of basic facts, but I'm sure time going forward here, we're going to find out, the significance. Now, FTX has already claimed Chapter 11 bankruptcy, and the person that's interesting, the person that has now been tapped to manage FTX is the same guy that was tapped to manage Enron. When Enron went under, he was the CEO that was assigned to clean things up. So it's the same person.
Wow.
So he, during the bankruptcy proceedings, he, testified that he's never seen a case of corporate mismanagement this bad. And basically he said, FTX didn't have any internal accounting systems. We're talking about a company that was valued at $32 billion and had, I don't know how many billions of dollars in customer deposits and loans. And they had other, investments too, as well. Also brought down some other companies. So there's been a contagion effect in the sense that there's, BlockFi is a fairly well-known centralized finance lender, which dealt in crypto. They got in trouble with this Luna coin token that I was talking about earlier, and FTX out with a line of credit of some type to provide liquidity. Anyways, long story short, because FTX failed, then obviously the facilities that were set up for this BlockFi, they failed. So BlockFi is now in bankruptcy, and it's, they had a lot of institutional customers, if you will.
Yeah.
And so the thing now that everybody is kind of looking for is, where's the next contagion going to hit? And there's a huge custodian in the crypto world called Genesis. And Genesis, they have, they're into a whole lot of different things, including an ETF, Bitcoin ETF called GBTC. You can go on to, I think it trades on the New York Stock Exchange. And so people are wondering, well, okay, how secure? Because Genesis, was a custodian and they were heavily involved with FTX. And so every kind of, it's back to 2008, except for, we're dealing with the crypto world as opposed to the TradFi, the traditional finance world, and the same. So people are nervous, basically. They don't want to do business with various companies or other entities just because they don't know what their exposure is to these various other companies that could get caught up in the contagion effect of FTX going down. So if you're asking me, I think there's more dominoes to fall. I mean, BlockFi is the bigger one. Genesis, if it were to fall, I mean, it would set crypto back. It would set the whole industry back significantly because it's a huge player. It's a massive. They have their own stable coin. Now they're claiming that it's back 1-to-1 with US dollars, but right. I don't. They're too quick in providing proof of that. People are still wondering whether that's in fact true or not. So, yeah, there's been a lot.
Yeah, that's really interesting. So all the money that's deposited to this company, for example, so they're depositing their currency, right? Their fiat currency. Let's say it's US dollars or something, right? What happens? I mean, has it been converted into a cryptocurrency? Like a decentralized cryptocurrency, or is it a centralized currency? Like, have everybody lost their money? Like, is it gone?
It's gone. So it was an online exchange, cryptocurrency exchange. So you could deposit fiat currency like US dollars, but you could also transfer in cryptocurrencies from other wallets that you may have, other exchanges or sources that you may have. So Yeah, so it's
So it
it,
was the value that dropped then, not exactly like it wasn't like it was the currency or the dollars weren't stolen. They were
well, it was both, right? The value. So let's take a look at the Ontario Teachers Pension Plan. The investment they made was in the FTT token, and so they invested, apparently the number is $90 million. I mean, I've heard different numbers. I heard 90 million, I heard 400 million, but I think 90 million is actually the number. But again, I don't have that number on hand, but it's a significant amount of money. But they also may have had cryptocurrencies investments sitting at FTX, right? So not only did their equity get vaporized, but because FTX was taking customer deposits and moving them to another entity, and then that entity, got involved with some risky bets that didn't pan out, then when you lose on a risky bet, that money's gone, right? So it's kind of a double-edged sword in the sense that, one, the equity of various players got vaporized, and if they had, like Kevin O'Leary has already come out and said, yeah, his equity's gone, and as well he had, he said, based on his net worth, a small amount, but I don't know what that amount would be, deposited on at FTX with various cryptocurrencies like Ethereum and Bitcoin and
yeah,
whatnot.
yeah, yeah. Interesting. Huh. Well, so I guess that's so the setback, like you said, there's a setback. Do you mean more like the sentiment, like of the people as a group towards cryptocurrency is going to be setback? Is that what you meant?
Um, it's just bad press for the industry, right? Now, again, it's not a failure of blockchain. Blockchain is not been a part or caused this or is affected by this
Mm-hmm.
directly, because it's not it truly is it's a failure of centralized finance. So again, going back to the acronyms, the TradFi and CFI and DeFi. So I'll explain the three. So traditional finance is your banks, your exchanges, your brokerages, your payment processors. Okay, that's all traditional finance. Uh, Centralized finance, very similar to traditional finance in the structure, in the sense that you're generally owned by an entity. Maybe that entity is one person or a small group of people, and they carry on business very similarly to traditional finance. But with one big difference is that there's no regulation, right? So traditional finance has got to play by the regulator rules, and so the centralized finance, when you're talking cryptocurrency, is basically Wild West type stuff, in the sense that they operate like traditional finance without the regulation. And then the decentralized finance. Now, all of this stuff may actually have a silver lining when it comes to decentralized finance or DeFi, in the sense that this wasn't a failure of DeFi again, right? So it was a failure of centralized finance. And so DeFi, when we get into our smart contract discussion, we'll be able to explain a little bit more what DeFi is and how it operates, because it operates significantly different than centralized or traditional finance, right? So
Okay.
we'll kind of touch on the differences between the three.
Okay. Well, let's do that. Let's talk about a smart contract. So, I mean, we there was a lot we touched on last time, but yeah, the smart contracts was something that, if we could really get into, what exactly that is would be awesome. Thank you.
Okay. So a smart contract is basically like any other contract that, say, you and I would get involved with, um, but it's all done digitally, if you will, right? So it's a smart contract that runs, and we'll use Ethereum because it's the biggest one. Let's say we got an Ethereum smart contract, and I'll give you a very basic example of what a smart contract could look like. So let's say Gary and Greg want to place a bet on the football game, right? And you've taken Kansas City Chiefs, and I'm taking the Cincinnati Bengals. And I don't really trust Greg, though, because I don't know. I've heard that sometimes when he loses a bet, he doesn't pay up, right? So I want some assurances that Greg's going to actually pay me. And Greg feels the same way about me, right? So we need to find some way to have some trust, and that's what a smart contract does. It provides that trust. Okay, so what we would do is we would write this smart contract, and if we knew, how to program like the code, and it's called JSON is the name of the code, but let's say we don't know how to do that, and we find somebody that's going to write this contract for us, and be it a lawyer or engineer or whoever writes these things. And so we're going to say, okay, Gary and Greg are making a bet on the outcome of the Bengals and Chiefs game, and they're betting 1 Bitcoin each, right? So, they're putting up a Bitcoin. So what we would have to do to enable this smart contract would be to transfer this Bitcoin into the contract, right? And so basically, Greg has a wallet, Gary has a wallet, a digital wallet, and in that wallet, we have our Bitcoin. Mm-hmm. And what we do is basically a new wallet, which is the smart contract, and we're going to deposit our Bitcoin into that smart contract. So now the smart contract is fed, right? It's got the consideration, right, for this contract that we're entering. So then what we would do is we would tell this contract saying, okay, so Gary's taking the Bengals and Greg is taking the Chiefs, and we want you or the contract to search the agreed upon source of information that's going to determine the outcome of that game. So in this case, let's say it's NFL.com. Mm-hmm. So we're going to tell this smart contract to monitor NFL.com for the results of that particular game. And if the Bengals are going to prevail, then the contract is going to automatically send to my wallet all of the Bitcoin that was in the contract wallet because I won the bet. Or if Greg wins the bet, then the contract is going to automatically send, once this information from NFL.com has been confirmed that the Chiefs won, then Greg is going to get all the Bitcoin that's in that wallet. So that's just a very basic example of what a smart contract is. So it's there's no third party involved other than if you need somebody to write the contract, right? But, I mean, other than that, it executes by itself, which then gets, and I don't know, it's hard. I don't know whether to explain something now or later because it really does mean something for kind of understanding the big picture. So when we're talking about smart contracts, really what we're talking about is something called Web3. Are you familiar with that terminology?
Kind of. I'd love to hear more about it.
So
this is my understanding that it involves like metaverse and that kind of interacting in a digital space, utilizing digital currencies and digital products, right?
That certainly is activity that takes place in Web3 for sure. Yeah. The easiest way to explain Web3 is to say, well, what's Web2, right? So Web2 is basically a read-write system, right? So you can read and you can write on Web2. Web3 is read, write, own, or execute. So you're adding an own, execute paradigm to the Web2, right? So when it says own, that means owning Bitcoin or owning Ethereum and being able to prove that ownership. And execute is just what we talked about with the smart contract, right? Okay. So execute transactions. Again, this is all without people involvement, right? It's just all based on digital contracts and smart contracts. So Web2 is read, write, and Web3 is read, write, own, execute.
Okay. All right. So how does that play into companies like, let's say, Microsoft, for example, where they're mass producing a product like Windows or Microsoft Word or anything? Like, does that change any of that? I mean, I guess you're not going to own it, but you're transferring funds for it. What I understand about is that there's the scarcity in the model that you're talking about, right? Which creates a higher value on things like the art, for example, the NFTs, or NFTs are connected to the art. Am I way off here?
Well, I mean, certainly NFTs are in art format. You can buy
Right,
art-based NFTs, right?
right.
But I mean, I think when you think about Web3, I mean, it's not necessarily specific to a transaction. It's more so when you say read, write, own, execute, right? You're talking about the ability for Web3 to be a medium of transfer of value, right? And being able to execute that transfer of value without human interaction, right? And so it's all so Web 2 again is just read write. So that's when we're on the internet and you're going to buy something online, let's say at Amazon, that's a read write transaction. Okay. You don't get proof of ownership by buying something at Amazon. You
No,
don't, there's nothing that's going to be executed other than your payment, right? But I mean that's again not when we're talking about execute, we're talking about executing a contract as opposed to executing a payment. There's a bit of a difference in the sense that the payment execution is done in the TradFi world, if you will, right? And by traditional finance, by payment companies, whereas payments in the Web3 world are not handled by a payment processor; they're handled by a smart contract.
right. So if we look at like, and this is something I didn't realize until the modern age of online music, but even when we bought compact discs and records and cassette tapes, like we never actually owned the music. I thought I did when I was buying them back then, but you never did actually own that music. It was just happened to be on a package,
I think
right?
you bought something, but that license restricted your use of that material,
Okay.
right?
Okay.
When you bought a CD or an album back in the day, right? I mean, you didn't you owned the material that album was made from, but you didn't own the rights to the music other than that you have a license through purchasing, that CD to listen to. But you couldn't go and put it on public display. That you couldn't play that music for unless you had written expressed consent,
Hmm.
right? Like the Toronto Maple Leafs when they play their music during the stoppages in play, they have to pay a licensing fee to play that to the public, right? They don't just because they own the CD and now it's probably obviously it's digital, but just because they own that digital piece of music doesn't give them the right to play that during public events, right?
Yeah. So do you think that's where everything's going to go? I mean, when it comes to contracts on um, your artistic rights or whatever it is, right? I mean, yeah.
For the music industry specifically, if that's a very good example of where smart contracts and NFTs come into play, because like you can buy an NFT that represents the latest Metallica album, let's say, and
Good example.
yeah, well, I was going to say Iron Maiden because they're my favorite band, but nobody probably knows of Iron Maiden. So I always
Well,
thought, but like so when I buy their music and it's in the form of an NFT, it could based on the smart contract that comes with that NFT, restrict my use of this to whatever specific medium that I'm buying that for, right? If I wanted to use that music for any other purpose, it wouldn't actually play back unless I paid a royalty, which would be handled by this contract, and it would be, the funds that would be paid under this contract would be automatically paid to the to the well, I guess it would be the music producer who would onwardly pay that too. But you may not even need music producers in this new world in the sense that cuts the middleman out, right? So
mhm, mhm.
you don't have
L-
able. or that, that they're going to produce this material. You can be produced, and with the smart contract, it could be marketed without their services, right? So again, yeah. So when you talk about music, there's a whole host of applications that can be beneficial to the musician or the artist or whatever you want to call them, and that they have more control over their their work, I suppose, and so this is definitely where it's going. Like, it was interesting in my lifetime. I went from vinyl albums to cassette, to 8 tracks, to cassette tapes, to CDs, to digital music, and then the next piece of this evolution is this Web3, read, write, own, execute. When and that can be formulated right to the the music production, and so now it'll still be in a digital format, but the ownership will be a lot different than, like you said, like when you download a song, you have no ownership of it, right? And so it's very hard just in a Web2 world for them to track what Greg's actually doing with that. I mean, you could go to a bar and, let's say you're a DJ, sure, and who's going to know, right? But with the NFT and based on the smart contract and other technological advances, it could potentially restrict Greg's ability to, take that music and use it for any other purposes than what you specifically bought it for, which is maybe personal listening enjoyment, right?
Yeah, absolutely. So, I mean, that's the question. How are they going to monitor that? Like, all the speaker companies are going to have sensors in it or something. No, I mean, I don't know. Like, how do you? I don't know where it all goes. That's the thing. Nobody can tell the future. But again, then you're infringing on people's freedoms at the same time. How far do you take that? That's the question, also.
Yes, there's definitely a lot of questions when it comes to privacy and freedom and ownership, right? Like, if I'm paying, to own something, like you produce some music and I'm buying that music from you, like, shouldn't I be able to enjoy that in any medium that I'm, that I want to? Like, I mean, I can understand, how, like a company like the Toronto Maple Leafs would have to pay, because they're getting paid to put on a spectacle, right? And part of that spectacle is entertainment for the crowd, and so they're entertaining the crowd by playing this music that was produced by an artist that should probably get compensated, because the Toronto Maple Leafs are making money off of that particular display of their music. So I mean, again, there's a lot of different questions, a lot of different scenarios, and over time, I guess it's all going to get worked out. But right now, we're still at the ground floor. Like, I mean, this thing has just started to leave the train has just started to leave the station. So there's a significant amount of miles to go before all of this is commonplace. And 20 years from now, Gary and Greg will be sitting here having a conversation, going, wow, that's how it played out.
Yeah.
Maybe surprised how it plays out, right? Well, that we consider that—that's a possibility, or this is a possibility. So I have a feeling that if we do have that conversation 20 years from now, we will be surprised some of that.
I'm sure we will. You don't see it as a fad, huh? I mean, I don't either. I know there are people that do.
Yeah. I mean, what's a fad? Right? I mean, so you got to look at, a fad. What are the components of a fad, right? Like, what can you think of a fad that came recently?
Maybe it's not a word. Maybe it's not the right word, but I guess if we think of the car, right, when it first came out, and everybody said, well, what's wrong with horses? Then there's a whole story there that just escapes me. But a car makes a lot more sense, right? At this point, looking back on it, riding a horse is more of just I guess a lifestyle.
Well, it's evolution, right?
Yeah.
You evolve from riding a horse to riding a a car, and the car, was run by gas. Now we're riding cars that are run by electricity. So that's the next evolution. So, I mean, is it a fad? Some of it might be, but a lot of it isn't, right? I mean, I think when it comes to trustless uh, third party ability to eliminate third parties, I don't think that's a fad. I think that's the next, like, because if you look at the internet, we talked a little bit about the evolution of the internet the last time we talked, so I won't belabor that discussion again. But I mean, if it's not cryptocurrency and blockchain, what is the next piece of the evolution of the internet, right? Like, where does the internet go? Is it the best, and is it going to stop and not move forward from this point?
No.
I don't know. I think we've come so far in such a relative short period of time. I mean, 25 years. It's gone from, we talked about the picture coming down in one line at a time, and now we're, Gary and Greg are having a video call that, 25 years ago just wouldn't have seemed reasonable that, we'd be doing this, right? So, I mean, it's not a fad. To me, it's the evolution of where things are going digitally in our world. And, you mentioned the metaverse just a while back. I mean, I got this Oculus glasses from Meta there, and I don't know. I mean, for me, it's I'm a little older and maybe not as impressed as much as as the younger crowd is, because I don't see how this thing is going to take off. Now, I said the same thing about the internet back in 1994. It's
Right.
I'm not going to take off. So metaverse, I mean, they're trying. I mean, they're putting on different like. There's a company called tokens.com. They trade on the Toronto Stock Exchange. This is not investment advice. I don't own any of this company, but they're metaverse. I mean, that's what they do, is they build metaverse real estate, right? And so, they rent that real estate out to, like, they're having a fashion week coming up in March, which they had back in last March. And all of the big fashion outlets, like the Dolce and Gabbanas and the, I'm not really into fashion, so I don't know all. Like some pretty big name fashion world participate, and they create, wearable NFTs that people buy and sell. They trade. So I don't know. I mean, it's interesting. I think it has to become a little bit more real world useful for somebody like me to get into it. Like I'm not interested in going to a fashion show online. I'm not even interested in going to a fashion show in real life. So, why would I go, to a fashion show online? But there is a segment of the world that enjoys that. So, the metaverse, is that part of the future? It possibly could be. I mean, I think it's too early to tell. But the blockchain and the cryptocurrency technologies that come, again, metaverse might be a fad, right? Like, if you're talking. Maybe metaverse is a fad, but again, the underlying technology being blockchain, again, I don't believe that's a fad. No, that's evolution.
Yeah, fair enough. All right, what else do I need to learn?
Well, we talked about the centralized, decentralized, TradFi. We talked about smart contracts. I mean, we can talk about the different decentralized finance entities. So, for example, well, we have two main types. The first one is a lending entity, right? And so a couple of examples of a lending DeFi entity would be Maker, which I think we talked about the last time. They create that stable coin called DAI. So that would be a decentralized lending platform. And another one would be Compound, where you can take your coins and you can put them up for collateral. So you can take your coins and you can put them into a smart contract, and that smart contract is specifically related to a pool of like-minded users who are providing liquidity, in this case a loan facility, to people who want to borrow, right? So, for example, on Compound, I can take my Ethereum coins and I can go and put them into a smart contract and basically lend them to compound so that the compound can lend them to somebody who's interested in borrowing them. And obviously, whoever's borrowing them is paying an interest rate. And so that would then, a percentage of that interest that's being paid on that Ethereum that I lent to the smart contract would be coming back to me in the form of additional Ethereum, right? And so, that would be an example of a decentralized lending platform. And what separates the decentralized platform from a centralized platform is that a centralized platform has a management structure, right? It has people that are responsible for the day-to-day operational competency of that organization. Whereas with a decentralized finance entity, the day-to-day, like it still may have a management structure, and we can talk about that a little bit after I explain, the operational day-to-day operations of a decentralized finance entity is all smart contract driven, right? Okay. So, again, so if I'm giving my Ethereum tokens to Compound, I'm entering into a smart contract with them where I'm giving them these tokens. I get them back when I ask for them back. And in the meantime, while they have these tokens, they're paying me, a portion of the interest that's coming from whoever's borrowed these tokens, right? And that's all. And so the person borrowing the token enters into a smart contract with Compound saying, yeah, I'll borrow these tokens, but they're going to have to put up collateral, right? So they can't just borrow the tokens. So they're putting up, let's say they want to borrow Ethereum and they put up, they can put up DAI, for example, as collateral, right? And it's stable, and there's some, it's interesting because, for example, I find it difficult to believe somebody would want to borrow Bitcoin because you have to pay it back. And let's say you borrow the Bitcoin at 10,000 or 15,000 or whatever it's trading at today, and all of a sudden it goes up to 100,000. You got to pay back that Bitcoin, and you got to go into the market and buy it, at 100,000. So it doesn't make a lot of sense. Although there are trading strategies where you can go long and short by borrowing this token and token. Anyways, it's all beyond my little comprehension brain. But so for example, if you're going to borrow a token, I would borrow a stable coin, right? And then take the proceeds from my borrowings. Like say if I had Ethereum and I say, I want to buy some more Ethereum. So I'm going to put my Ethereum up as collateral. So I still hold my Ethereum. I'm not selling it. I'm putting up as collateral. I'm going to get a US dollar stable coin loan, USDC or US dollar tether or DAI or whatever that coin happens to be. And then once I get the proceeds from my loan, my DAI, I'm going to sell that DAI. I'm going to buy some more Ethereum. So I've leveraged now my Ethereum because I think Ethereum in the long term is going up, right? So, so again, that's all done by contract. It's all done with collateral, and there's no human being involved in that transaction, right? Okay. That's decentralized finance. Centralized finance, the day-to-day operations is still managed by a human being, which really separates the two.
Okay. So one is more trustworthy than the other.
Well, and recent examples have been that, centralized finance failures that we've seen, given way to maybe, this is a benefit of decentralized finance where you don't have humans involved in the day-to-day, operations of this particular entity, right? So that everything that is done by smart contract, and management can't just decide, well, you know what, we're going to take our customer deposits and we're going to move them to this entity. I mean, it can't be done because it wasn't part of that smart contract, right? Yeah. So enter into the smart contract, I still maintain ownership of my coins, right? So like if I'm on Compound and I want to provide Ethereum as a coin that I want to lend, or I want Compound to lend out to people because I want to earn some interest on it, they can't go beyond the scope of that smart contract. So it takes the human element of, I don't know, greed or maybe not having thought things fully through.
Sure, yeah.
Or whatever the human element is, the smart contract eliminates that, and it sticks to the parameters of that smart contract, right?
Yes.
So back to the maker platform, right, which creates the stable coin DAI. So there's a foundation called the Maker Foundation, and it manages, the business of Maker, right? So like the marketing, the onboarding of collateral, and as we talked about the last time, there's some real world collateral being added to this platform. Well, you need to have people that can get involved with those discussions and set those transactions up. But it's the day-to-day operation that's driven by the smart contract, which separates, Maker, because again, the foundation has a similar structure to a corporation, right? The difference also being is that the owners of the foundation are the owners of the Maker token. And so anytime there's any kind of decisions to be made at a governance level, if you will, of how the protocol is going to operate, there's always hope on these proposals. Like, for example, if Maker, quote unquote, management says, hey, listen, we should onboard, this bank here is going to offer us some commercial loans as collateral because they want to collateralize these loans. They want to borrow DAI. And we're recommending that we do this, and here's why. And then so it'll go up to a vote to all the Maker token holders as to whether that collateral is authorized to be onboarded into the Maker system, right? So, instead of having like in a traditional finance or a centralized finance model, management would be making those decisions, and it wouldn't necessarily go to shareholders for a vote. I mean, all the shareholders usually vote for is the directors, right? And then, once the directors are voted for, the directors then hire management. And they say, hey, management, this is what we want you to achieve. And then the directors basically once a quarter maybe have a meeting with management to see how things are going as it relates to the deliverables that the board of directors set out that management achieve, right? So, the shareholders are kind of just passive bystanders in that structure.
Yeah. So this is like my head. I'm thinking like, okay, how can this apply to incentivizing people monetarily in a corporation, for example? And the only thing I'm thinking is it could work really great with smart contracts. However, you have the volatility of the values. Can you do a smart contract with traditional finance?
Well, I mean, so just going
or something like that. Like, I mean, maybe it's a coin or something.
So, it's a good question, and I guess the short answer is yes, in the sense that in the Maker example where they've onboarded Huntington Bank is the bank that's involved, and they provided commercial loan collateral to securitize $100 million DAI facility. Okay, so you have the commercial loans are part of traditional finance,
right? But
packaged up, and again, I don't know how the legalese works with all this and how they fundamentally set up this facility. I mean, that's all the details I don't have,
that's
but
okay.
I can that they have. So your question was, is traditional finance kind of be part of the smart contract world? And the answer is yes. And that's the example I'm going to use. The other example I'll use is the bond issuance by the European Union, right? They issued a digital bond where, so that's a traditional finance organization that is, using smart contracts to, to issue, a bond issuing, right? So, in my opinion, I mean, traditional finance and decentralized finance are going to merge, right? So you're going to have, a combination of decentralized finance that works along with traditional finance and allows traditional finance to move, to evolve, right? So again, we're talking about evolution, right? So what's the next stage of evolution of traditional finance? I mean, we can go all the way back 200 years and say, well, here's what banking or traditional finance looked like 200 years ago, and now we compare it to how what it looks like today, and it's, I mean, a clear evolution, right? So anytime we're talking about, the subject matter that we're talking about, really what we're talking about is evolution, and how do what is the evolution of this going to look like? And I think it involves, like you said, that's a great question. Traditional finance, decentralized finance is not going to replace traditional finance. It's going to become part of traditional finance, right? And I mean,
Yeah.
like I think the last time we talked, that was one of the things that the question asked was, well, is traditional finance concerned or worried that decentralized finance is going to take over their business? And I don't think they're worried. I think they're interested. I think they're, they see it as an opportunity to grow, and to evolve into something different.
Yeah. I think being a part of the general population, I see a concern by people without cash being a problem, and the centralized banks having control over your spending habits, or at least being able to see that without the ability to use cash, is a problem. Like we talked about this last time too, but I don't know how that's going to get navigated. I know that the banks are, I think it was you that said it, the banks are aware of this stuff, right? And they're being proactive in this. Is that correct?
I guess, the banks are obviously extremely aware.
Of course, it's their business, right?
They understand, the potential, and they understand, evolution as well, right? They understand that we live in a digital world. Everything's becoming more digital. Our lives are moving online, whether that's good or bad. We could probably debate that, but let's face it. We're talking about human evolution too, right?
Yeah, man.
Where do humans evolve to? Elon Musk is now saying he's 6 months away from implanting chips in people's brains. So, and that all comes part and parcel with blockchain, with digital, with digital evolution, right? So, yes, the banks are very much aware. Like I said, I think the last time, there is one bank that's already announced an executive that has responsibility for digital currencies, right? So, and I think I read an article put out by Ripple, which makes the XRP token solution. We talked about that a little bit the last time. And they said that they survey, and 85% of finance professionals believe that within 4 years, the central bank in their country will issue some type of digital currency. So if we're 4 years out, that's not a long time. And so banks have to, this is a huge, significant change to the plumbing of the financial institutions when it comes to, the structure of how you operate in a digital currency world. Mm-hmm. So obviously, that's not going to be an overnight change, right? That's going to be a significant amount of retooling of the internal processes of a bank. And I think we talked a little bit about, how the processes are. The banks, since, for 200 years, it's always been done the same way, other than the fact that it's now digitized, right?
Yes, that's right.
A digital realm, but the same processes are involved in those digital processes. Now we're moving from a digital process to a digital not even physical. I don't even know what the word is to describe it, but we're having digital plumbing as opposed to the old plumbing that just moves digital information, right? So answer your question, the banks are very interested, they're very involved, they're very aware. Everything is yeah.
So in the capital markets and in private equity and in all of these kind of institutions where you've got some access, what are they saying? Are people investing a lot in this? Are they scared of it? I mean, what's happening in that regard?
Well, I mean, in the last 12 months, people are, kind of concerned about volatility, right? And so, I mean, but prior to the, 12-month period, I mean, if you go back 24 months, risk on. People were very willing to take capital and invest it in, you know, blockchain and cryptocurrency and companies that were playing in the space like FTX, right? Like, I mean, that's
Yeah.
that right now, we're in a risk-off world. So yeah, no, there's not a lot of, which is interesting because I find that when you get into a risk-off world is probably when you should be taking the risk, and when
Mm.
you're in a on world, you should probably be lessening your risk mode. And it's kind of an inverse relationship. If everybody's taking risk, you should probably take less. It's like Warren Buffett, right?
Yeah.
If everyone is selling a stock, you should be buying, and if everyone is buying a stock, you should be selling it, right? I mean, it's proven to be valuable advice. So as it relates to the blockchain world and digital finance world right now, then yeah, no, people are concerned, and I think there's probably some investment going on behind the scenes quietly. I think a lot of the like we didn't talk about the other type of DeFi entity, which is a brokerage entity, right? So where you can trade and exchange. Right now, it's digital currencies, but it may be digital securities of some type in the future, like stocks or bonds or whatever the case might be.
Mhm.
So that we cover off that end of the DeFi spectrum. DeFi brokerage or exchange is basically it's a pool, and so traditional brokerages, how they have a structure when it comes to the operations of a order book, right? So you have a bid price and an ask price, right? Like, so if I wanted to sell my stock, I would go on my trading app, and that's my brokerage, and then I would look at, well, what's the best bid price, and is that the price I'm willing to sell my shares at,
Mhm.
right? And if it is, then I would sell it on the bid. If not, I'm not real anxious to sell them. Well, I'm going to ask X for my shares, and if somebody grabs them, great. And I've sold them. So that's how a traditional finance brokerage works: is an order book with a bid and an ask price. You understand that, right?
Yeah, I think so. Yeah.
And so, and then so with a DeFi brokerage, it's a little bit different in the sense that there is no order book. Because again, remember, the day-to-day operation is not managed by a human; it's managed by smart contract. So you don't
Yes.
have an ask; you have what's called a liquidity pool. Okay,
Okay. Okay.
and so what that is like, say, if I want to provide liquidity to a particular market pair, let's say, for example, Ethereum and DAI, right? Because we've talked about those two, and so you can go on. Uniswap is one of the decentralized finance brokerages. So you go on Uniswap, and if you have Ethereum and you want to sell them for DAI, there's a liquidity pool for that, where
Okay.
people say, I've decided I want to be part of this pool because I get part of the trading commissions, right, as part of the pool. So I'm going to provide liquidity. I'm going to provide the exact same amount of Ethereum and DAI, right? So in dollar terms, right? So if I'm going to put up $100 US in Ethereum, I'm going to put up $100 US in DAI. Okay, so that's my contribution to the liquidity pool. And so when somebody has, let's say they want to, buy Ethereum, and they go to that, and they have DAI, so they want to buy Ethereum and they want to use their DAI to buy the Ethereum. They go to the liquidity pool, and instead of a bid and an ask price, this liquidity pool takes information from the marketplace, and I don't have the details on it specifically how it's done, but the market price becomes whatever the consensus is of various information sources, right? So if Ethereum is trading at $1,000 and that's the consensus of all the different exchanges, that's the price of Ethereum in the liquidity pool, right? And so I can then change my DAI to Ethereum as part of this liquidity pool, and then so I would take my Ethereum and go and do whatever the heck I wanted to, and I've traded my DAI, and now it's sitting in the pool. And so there's a formula that's used, and again, people much smarter than me have figured this out, is X times Y equals K. So basically, in this liquidity pool, the two assets equals K at all times, right? So if Ethereum is worth X and DAI is worth Y, it's always worth K.
Okay.
So,
All right.
again, I'm just giving you the formula. As far as how this is figured out, don't ask me. That's
Okay.
pools operate, and there's significant volume on Uniswap. I mean, Uniswap has almost the same amount of volume as Binance, which is the largest centralized finance exchange, right? So it's run by humans, right? So it is becoming a big deal where more and more people are using, and again, the failures of FTX, is highlighting why people maybe should be using these decentralized finance exchanges, because you don't actually send your tokens to somebody to hold on to. You keep them in your own wallet, and then when you want to make an exchange, you just go to the pool that you want to make the exchange with, and you make that exchange, and everything goes back into your own personal wallet. So again, smart contracts and day-to-day operations being managed by smart contracts, and taking the human element out of it makes things safer, right? Because failures of humans being greed and sometimes lack of thought, and all kinds of different human emotional factors out of the day-to-day operations of that particular entity. So that's what the DeFi is really highlighting here when you compare it to the centralized finance failures, right?
Mm-hmm.
So those are the two entities: lending DeFi and brokerage DeFi.
Okay. So smart contracts, you said you could hire a programmer. I mean, are there like templates you can use? Do you know that?
Well, I mean, for example, I was one smart contract that I entered into in the past was through Maker, and so I went through an exchange called Oasis, right? That allowed me to do my own smart contract, right? So it had the template already, and so all I had plug in the amount of so I had Ethereum that I wanted to put up as collateral to borrow DAI. So I just went in and I put in how many Ethereum I wanted to put up, and then I put my address, my wallet address, where I stored my Ethereum, and then so when I finished this contract with them, it took the Ethereum from my wallet, put it into this, they call it a vault, which is essentially another wallet, and put a hold on that. So and then transferred the DAI into my wallet, my personal wallet. So I didn't need a programmer, because they already had this is a template that they wanted to replicate over and over and over again. But that situation where Gary and Greg wanted to make a bet, I mean, that's maybe a one-off type situation. I don't know of any. There probably is. If we went online, we could maybe find a contract template that had to do with bets. As a matter of fact, there's it just came out this week, another Elon Musk creation called AI. Oh man, I forgot what the exact name, and I took a quick look at it today. But anyways, it's only been around for 5 days, and over 1 million people have signed up.
What?
And basically, what it does is it's artificial intelligence where you can ask it to do anything, and it'll do it for you, and it will ask you relevant questions about what it is that you want it to do. Like, so you could theoretically go into this AI. I'll share the link with you after, but it's absolutely mind-bending what this is. And so you can actually go in and type in, say, create me a smart contract on Ethereum, and then it'll come back and say, okay, what kind of smart contract? Give me the detail. Well, Greg and I want to bet on the football game, and okay, so what's your wallet address? It'll come back and ask you the sequence of steps. Oh my gosh! So it'll create the smart contract for you. And so, Elon Musk is quite a human being. He's done a lot of different things in this world. So, but this
man. He's the second time. This is the second time I've talked about him today with somebody. He's just always. at the forefront of everything.
Everywhere. I mean,
Yeah.
Teslas and SpaceX and rocket ships and boring companies and
Twitter.
and Twitter and he's anyway. How many hours in a day this guy probably doesn't sleep? I mean,
It
I don't
must
know.
not.
I don't pulls it off. He's got a lot of responsibilities on his plate, and I
Yeah.
guess he's a pretty smart guy, right? So
He must, or he trusts his people that are smart too to just to go do this, and I don't know. So
I
yeah,
think he's logically very apt. He's got a huge aptitude for technology, and
yeah,
when somebody told him something, he knows whether it's bullshit or if it's real right away. So,
yeah, yeah, absolutely. Speaking of Twitter, um, we had briefly talked about doing a Twitter Spaces or LinkedIn Spaces or something like that together. Do you
okay,
want?
that's
I was
that'd
just, I wanted
be,
to. Sorry.
that sounds something that would interest me for sure.
Yeah, I didn't. I know we're being recorded, but no big deal. If somebody's listening, then they'll be looking for the Twitter space. So, um, yeah, I just think there's so. I mean, you have so much information, and I know so many people have so much information that we could do like a weekly to Twitter, LinkedIn audio space and just share information.
I mean, the digital world seems to move real quickly, and there's a lot of stuff that's always happening. So I think there'd be some good content to review on a regular basis, right? I don't know, is
Yeah,
weekly. I mean, could start weekly, but
I don't know.
I don't know. It could be daily if things really start, quickly. But certainly, yeah, no, I'm interested in being part of that. So I mean,
Hey, man.
let me know when and where and what, and
Okay.
you know, I know a little bit about some other stuff too. So
Well, I'm sure you do. Well, yeah, man. I mean, that's I know you do. My goal is to get at least all my thoughts put together by the end of this week on what we're going to do. I've got some other individuals like yourself that have a whole bunch of knowledge that, I'd love to just get on there and talk about it. So I kind of, it's getting around the structure, like where do you start? What do you do? Is it like I mean, really interactive at this point is where I want to go with it. Q&A, because you can go on YouTube and watch a video about anything, but asking people questions is is more important than I think watching or listening to just people talking, right? I mean, talking's good, but if people can be engaged in asking a question.
like I mean, it's like so. I mean, would I sit and watch an hour and a half video? I mean, if I was really enthused with the subject, I suppose I would. But if I was just a casual kind of, yeah, it kind of interests me, I'd much prefer to be interactive so that, as I'm watching, I feel like I have some input or some ability to
Yeah.
cut to the chase when it comes to, a certain subject in the sense that, I want to know more about that, or and you can immediately request that knowledge, opposed to watching the whole video and hoping, oh, I hope they touch on this kind of, you know what I mean?
Yeah, I do. But here's the other thing is that it's been proven through the past couple of years that people like long form information. You've got your big podcasters. I mean, they do 1, 2, 3, sometimes 4-hour podcasts. And so, I mean, it's hard to say, but I mean, I believe on some of the platforms, Q&A is where it's at. So somebody can ask Gary, like, what's the deal with this? Let's just cut to the chase, like you said, right?
Like,
So
I mean, I don't. I would find like I don't have the time to watch a 4-hour podcast or like I don't know. Like it's just I wouldn't have the patience either. I mean, it's like I said, I would have to be extremely enthused with the subject matter, and But I think interactive is probably the better route, just because I think it's just people have a better um, their their ability to focus on a interactive thing is better than somebody who's focusing on a video and it's, you know, they know it's an hour and a half, like, you know, be fast forwarding through parts of it and try to, you know, maybe hope I land on a relevant part of this discussion, you know, like, anyways, that's just my opinion.
Yeah. Yeah. We've all got one. And that's okay. Okay, man. Well, thank you. I appreciate your time. And I'll let you know what's going on with this Q&A thing. Okay.
Just reach out, Greg. Thanks very much for hosting again. I appreciate it.
Hey, man. Appreciate you. Thank you.
Thank you. We'll talk to you soon.
Okay, man. Have a good evening.
You too. Bye for now.
Bye-bye.